Good morning, everybody, and welcome to my weekly thoughts of the stock market in the week ahead. We are now at the week of September 14th, 2015, and it is Federal Reserve Week. So the Federal Reserve on Wednesday will kick off its two-day meeting. There are mixed expectations within the stock market as to what's going to happen, and I believe that the Federal Reserve will raise rates by 1/4 point. You know, stock market volatility, while those folks who believe that warrants no action by the central bank, isn't enough. We have a labor market that is moving towards full employment. We just had a GDP number that was over 3%. We continue to be more buoyed than burdened by low oil prices. And so I think the Fed will begin to move in the rate hike direction, and they'll do so this week. I don't think that's going to have a dramatic impact on stocks. Right now I'm still short volatility despite this Fed rate increase coming. My only fear is that the Federal Reserve starts to paint a picture for future rate hikes that the market maybe wasn't expecting. There hasn't been a lot of talk of the second rate hike and when that's going to come. And the chatter on that will probably start within a day of the Fed decision if they were to raise. I don't want the Fed to come in and insinuate that they're automatically going to raise rates again at their next meeting. That may be a little too soon, too fast. That may stir up some volatility and some selling within the markets. But I think for the most part, a Fed rate hike is baked in to our current equity market prices. Just quickly, you could see that we have sort of mitigated some of our losses a little bit in the S&P 500. We're still down a great deal from last month's big move. I wanted to follow up on something as well that I discussed last week in terms of volume. You know, we had a 4-day trading week last week, and once again on Friday, volume was light again. Not all that unexpected. Volume is slowly starting to drop in the S&P 500. It's coming back towards that 3.5 billion share volume benchmark. However, I did a 1-month moving average. That's the black line right here, and you can see that volume is still on a 1-month moving average ramped up, and it'll remain that way until we really get past these couple of spikes we saw at the late part of August. That's why I feel that market volatility is going to be here probably for about another 2 to 3 weeks once we digest this Fed decision and we get to the September jobs report, which I think will show further tightening in the labor markets in the U.S. economy. And again, I'm still not as fearful of what I'm seeing abroad as a lot of other people are. I think a lot of this has been the need for a correction, and because we haven't had one for so long, people sort of overreacted to it. One other thing I want to show everybody is a follow-up from a couple of weeks ago. I screened the entire S&P 500 on a variety of metrics, approximately 50 of them, and I've been keeping my eye lately on the relative strength index of all these companies. And a couple of weeks ago, we had well over a dozen stocks that were under 20 on the RSI, which typically means they are going to have some type of bounce, even if it's a dead bounce. The RSI is more of a technical measurement than anything else. It does not take earnings or balance sheets or any of that into effect. And right now we're down to 3 stocks in the S&P 500 that are under 20 on the RSI. They are Reynolds, Sempra Energy, and Joy Global. And boy, Joy Global has just had a really bad year. They are a decent company in a bad market right now for what they do. And so again, these 3 companies, I'm not seeing really anything compelling out of them to do any trading in the next week. Well, I hope everybody has a great week ahead. We'll see what the Fed does, and we'll see you later.